In this video, we will examine the recent performance of Molen, a company in the EV manufacturing sector. We're going to delve into the key data points and the news updates, discuss the impact on the stock, and the sentiments among the investors. So let's explore these factors that will ultimately contribute to the company's stock movement and what you should do next. But before we go into more details, I just want to say that if you like my content, please consider to drop a like and to subscribe to my channel, and to consider to take a look at the computer gear links that I have posted in the description. These are the computer equipment that I use on a daily basis, and as long as you make a purchase using my link, whether you buy the linked products or not, Amazon may pay me a small commission, which will go a long way in supporting the channel. So thank you for your continued support, and without further ado, let's begin with today's video. Molen experienced a disappointing trading day, failing to capitalize on the broader market rally, and the stock declined by approximately 4% at its lowest point, which indicates a very weak performance compared to the rest of the market or even the sector. Moreover, the pilot program that they recently posted regarding the Shoshone Native American tribe was negatively affecting the stock, which highlights a disconnection between Molen's public relations and the investors' expectations. Now, the overall sentiment from the market about Molen still remains uncertain, and there appears to be a lack of trust in the company's leadership, likely with reason, and also comes from the issues like reverse stock splits and the dilution concerns. The investors are now focusing on the company's ability to deliver on the products rather than these pilot programs and any sort of similar announcements. The short interest in Molen stands at approximately 93 million shares, with approximately 70% of utilization rate. Now, there are some growth stocks experiencing short coverage on this particular trading day, but Molen didn't witness a significant reduction in that interest. However, a portion of the short interest seems to hedge their bets, potentially indicating some sort of optimism behind the scenes. An interview with David, Molen's representative, is also scheduled, and investors are very eager to get answers from several key questions, including the timeline for a potential stock buyback, the updates on the share count, the impact on the pending lawsuits, and so on. So this interview could provide some additional answers on the company's plans and future prospects. Investors are curious about the possibility of Molen seeking an extension from Nasdaq due to recent events, as well as the company's considerations regarding a move to the OTC. The other thing is that some investors are also wondering if David would sell his, private jet in order to finance or to at least stand in solidarity with the rest of retail investors who may have been holding the bag after suffering severe losses. So basically, Molen's stock performance has been disappointing, of course, with the broad market rally, with investors displaying caution and also more hesitancy. The disconnection between the public relations and the investors' expectations have also contributed to a climate with a lack of trust. So the upcoming interview is going to be very important and needs to address the investor concerns. It's very important for the investors to stay informed and to make well-rounded decisions based on reliable data and trustworthy answers. Now, with all that being said, let's also take a look at the technicals. The trading volume is around 224 million shares versus the average of around 500 million shares. Over the previous 52-week period, the price fluctuated between 10 cents and $25.75. The volume of shares traded tells us how many shares are being bought and sold at any given point, and if there's enough liquidity to support a trading strategy. If the float is very thin, it's going to be easy to push the stock price around, but with this kind of low liquidity, it also means that the exit is going to be kind of tricky. As we compare the current volume against the average one, there might be a possibility to show trend reversal. In this case, there's probably not going to be some sort of trend reversal, but let's just say that a recovery might prove a pretty long and serendipitous route. The market cap of Molen is currently at 90 million shares versus the enterprise value of 17.3 million shares. So, as we compare the current price to the historical price, the stock is around 35% higher than the 1-month low, 35% higher than the 3-month low, and 35% higher than the 52-week low. On the options market, which often gives a hint on the market sentiment about where the stock price is going to go next, the implied volatility is 470% versus a historical volatility of 280%. The put-call volume ratio is around 0.03. Many stocks may have a higher put option volume than what they deserve, with the systematic purchase of put options to hedge against any sort of volatility if you have long positions. The most recent volume of options traded is around 28,000 contracts versus the 30-day average of 49,000. Regarding the open interest, the most recent volume of open interest is 978,000 contracts versus the 30-day average of 1.1 million contracts. Lucid Motors, also known as Lucid Group, is an EV manufacturer poised to shake up the industry with a cutting-edge technology and its sleek designs. It definitely stands out with its advanced battery technology, designs, and commitment for long-term sustainability. One of the key differentiators is the battery technology. Lucid Air has significantly longer range and faster charging time. Another reason might be where the company is or who created it where that actually matters. So, previously, before Lucid became public, many people were saying that the next Tesla might be NIO. However, due to regulatory and also distance issues, I would say that many people were worried that their investments may not have the best oversight. I'm not saying that SEC is perfect, but comparing to something that is right under their nose versus having to travel half the globe in order to find the operations and the market sales and so on, Lucid would present a more safer option compared to NIO. And this is what also prompted many people to focus their attention and, more importantly, their capital on Lucid. If we look at the long-term tendencies of Lucid price action, it's not hard to see that a bubble that gave so much hope back in 2020 now bursted. The market no longer wants to blindly follow the hype, because on one hand, it cannot persist on believing that the bull market, based on purely assumptions, can continue like this. On the other hand, it simply cannot afford to sustain this trend when so many obvious issues, like supply chain issues, doubts on flagship companies, doubts on demand, the end of subsidies in many key markets, the conflicts around the world, and higher interest rates attracting the capital have been plaguing the financial system as well as the real fundamentals out there. The market has long predicted that there will be a bearish market after such a prolonged bull market, and that most stakeholders believe that it's going to be a rough patch for at least a couple of years. The market peaked twice in the past, and if the first peak was caused by pure hype, the second one was then triggered by the rollout of actual products. Lucid remains one of the more solid companies in the sector and has kept its investment value or potentials for the years to come. The main question in everyone's mind is when should they enter in the stock? The long grind to lower price levels is likely going to continue, or at least the tendency may be there. But when we look at where it might lead the stock to, sometimes they can go to surprising levels. For example, I personally don't consider that Hyliion, another EV truck manufacturer that has also made the headlines back in 2020, deserves the price that it has now. Nevertheless, the sell-off continued for years. without an actual reason other than people have lost confidence and or trust and or patience with it. So the same thing could happen with many other players in the EV sector. There is no fundamental phenomenon or reasons to support those sell-offs, but at some point it also doesn't have to matter because they simply have to believe that there will be no new money to pour in the EV sector for the shareholders to eventually lose hope and trust and patience. In terms of the financials, Lucid had a strong financial performance in 2022. The company reported revenues close to $200 million in Q3 of 2022, which is a significant increase from just above $200,000 in Q3 of 2021. That strong growth was driven mainly by the launch of Lucid Air, the company's first vehicle, which began deliveries in late 2021. Lucid Air is a luxury electric sedan well received by the consumers and also helped the company to establish its reputation as a major player in the sector. Currently, Lucid has a negative net income caused by the fixed costs and other operating expenses that should be absorbed as the volume picks up. Overall, I would say that Lucid's financial figures paint a good picture about the company, but it's also demonstrating that Lucid is lacking a little bit of discipline in terms of cost control. Nevertheless, I would say that in the years to come, they would still focus on growth rather than cost control. Now, let's also talk about the shareholder composition of Lucid, because it is something that it's quite important to determine if the company is better for trading or investing. Lucid is currently held by institutional buyers for the most part, by more than 70% of the total volume. This would suggest that the price volatility may be lower than other stocks held mainly in the hands of retail traders. One key behavioral difference between institutional and retail traders is their horizon. Institutionals tend to have a longer-term view, which focuses on the company's fundamentals and the years to come when it's not the decades to come. They're also less likely to just jump in and out of a share because they can afford to have the loss. The short interest of Lucid has been significant over the past few months. It means that more and more investors have been betting against the company's stock by short selling it. Short sellers borrow shares of the stock and then sell them in the market, hoping to buy them back later, profiting from the difference. As of the recent data, short interest in Lucid represents 7.5% of the company's total shares outstanding. This is a moderate level of short interest, but significant nonetheless. It is important to note that the short interest is not a guarantee for a short squeeze, but it's still a very important metric to monitor, because this can tell us what is the current sentiment or the vibe about a stock. It's also worth noting that short sellers very often have actual valid reasons for their bearish sentiment, and that a short squeeze, no matter how likely it seems to be on paper, may never happen. Now, my recommendation for Molen, given all the circumstances, is to probably stand on the side due to the volatility risks being very high. And overall, I would say that at the moment, things are very much in the flux. But if you count out the solvency risk, I would say that it might be a good idea to start buying now for the short to medium term speculation. So if you would to commit eventually, once the current sell-off is gone, I would recommend to commit between 0.5 and 1% of your portfolio in the stock, and would also recommend to split that allocation in batches of 20% at a time so that you can purchase more in case of further retracements.